investing, and sending and receiving. There are many more valuable use cases in the Stellar ecosystem that I would love to be able to share with you today. But I would just briefly like to mention that in a recent report from the G20 and IFC, there were 5 Stellar ecosystem companies named for their innovative solutions in digital finance supporting MSMEs. Use cases like these are in varying states of maturity, but their current and potential value is undeniable. And none of these use cases would be possible without stablecoins. Stablecoins are a core technological component, and by extension, that means stablecoins are essential on delivering on financial inclusion. So that brings me to the Pwg report on stablecoins. The Pwg report raises legitimate risks, but its recommended solutions, they go too far. Specifically, to limit stablecoin issuance to insured depository institutions is not narrowly tailored to the actual risk of stablecoin arrangements for the simple reason that although there are outliers, most stablecoins, unlike bank deposits, are fully reserved. Instead, we advocate for a regulatory approach that it focuses more on stablecoin reserves by requiring stablecoin arrangements be fully reserved by appropriate assets, requiring reserves to be held as insured depository institutions, creating clear standards for regular audit and public disclosure of stablecoin reserves and key contractual terms regarding redemption, and by making it clear that payment stablecoins are not securities. Of course, regulators must be empowered to oversee these requirements. The framework should allow oversight through state banking supervision or a narrowly tailored charter of the OCC. In our view, this would promote the safety and soundness of stablecoin arrangements. We've started to see how innovation can be hampered in other parts of the world when regulators and lawmakers react prematurely. In Nigeria, stablecoins and blockchain technology were eliminating costly foreign exchange and transaction fees and slow processing times until the Central Bank of Nigeria abruptly ended that business model. And many innovators had consequently been stopped in their tracks. As we walk away from this hearing, I urge you to look at the industry and technology beyond the narrow lens of applications that often dominate the news. Thank you for having me here today, and I look forward to your questions.
Thank you, Ms. Dixon. Ms. Haas, you are now recognized for 5 minutes to present your oral testimony.
Chairwoman Waters, Ranking Member McHenry, and members of this committee. Good morning, and thank you so much for this opportunity to testify on digital assets and the future of finance. My name is Alicia Haas, and I serve as the Chief Financial Officer of Coinbase Global. I also serve as the Chief Executive Officer of Coinbase Inc., our U.S. subsidiary. I joined Coinbase in 2018, formerly was Chief Financial Officer of Sculptor Capital and One West Bank, and spent 20 years in the financial services industry. Today, I'm here to introduce Coinbase, talk about the evolution of crypto, and highlight today's regulations and how they could be changed to advance bipartisan goals of protecting consumers and promoting innovation. Coinbase's mission is to increase economic freedom in the world. We were founded in 2012 with the idea that anyone, anywhere, should be able to easily and securely send and receive Bitcoin. Over the last 9 years, our products and services have expanded to meet our customers' needs in the rapidly evolving crypto industry. We have customers in every state except the state of Hawaii, and as a remote-first company, we have employees in 45 states and in the District of Columbia, including 24 of the 25 states represented by this committee. We now securely store 12% of the world's crypto on our platform. This is across over 150 asset types, and we offer customers the opportunity to learn, to sell, to resend, to receive, and buy more than 100 assets on our platform. Additionally, we offer customers the opportunity to spend, to borrow, to earn, to stake, and transact on select assets. We serve more than 73 million customers globally, including 10,000 institutions and 185,000 application developers. Importantly, nearly 50% of our transacting customers are doing something other than buying and selling crypto, which indicates to us that crypto has moved past its initial investment phase, and we are now in the long-expected utility phase of this ecosystem. Since our founding, Coinbase has strived to be the most secure, trusted, and legally compliant bridge to the crypto economy. Coinbase is federally registered as a money services business with FinCEN, licensed as a money transmitter in 42 states, holds a BIT license and trust charter from the New York Department of Financial Services, and we are authorized to engage in consumer lending in 15 states. We have a robust AML BSA program, and we are one of only 2 digital asset members of the Department of Treasury's Bank Secrecy Act Advisory Group. In addition to the various state regulatory regimes, we are subject to federal oversight from Treasury, the CFTC, SEC, FTC, and CFPB. Much like the adoption curve of the internet in the 1990s, we are seeing dramatic advancements in crypto participation. There are more than 220 million crypto holders globally. And around 16% of Americans have invested in, traded, or used cryptocurrency. Total crypto market capitalization at the end of the third quarter was over $2 trillion, up from $800 billion as of the end of 2020. Coinbase's platform is powering the crypto economy, a new financial system for the internet age, which we believe is a critical infrastructure layer to Web 3.0. Technologies like non-fungible tokens, which we call NFTs, and decentralized application platforms will lead the way to Web 3.0, which will revolutionize the internet. Much like the industry was revolutionized when it went from static content to the dynamic engagement content we have today. We believe sound regulation is central to fueling crypto innovation and adoption. That is why we introduced our digital asset policy proposal, which we refer to as DApp. The DApp assessed the challenges of the existing regulatory framework and proposed a 4-pillar solution. First, we believe the government should recognize digital assets under a new, comprehensive framework that recognizes the unique technological innovations underpinning digital assets. Second, the responsibility for this new framework should be assigned to a single federal regulator. This regulator would be charged with establishing a registration process for intermediaries, which we refer to as marketplaces for digital assets. Third, this new framework should have 3 goals to ensure holders of digital assets are empowered and protected. A, we believe in enhanced transparency through robust and appropriate disclosure requirements. B, we want to protect against fraud and market manipulation. And C, we want to promote efficiency and strengthen our market resiliency. Our 4th and final pillar is to ensure that regulatory solutions promote interoperability and fair competition. In conclusion, Coinbase believes crypto will drive transformational change across society in positive ways. This is why our mission is to promote economic freedom around the world. Disruption always challenges the status quo, but we believe sound policies can improve this system for everyone. We applaud Chairwoman Waters, Ranking Member McHenry, and the members of this committee for holding this important hearing. Thank you for the opportunity to discuss these important issues, and I look forward to answering your questions.
Thank you very much. I now recognize myself for 5 minutes for questions. Mr. Casarello,
괜찮아.
I'm a bit concerned about your company, Paxos's partnership with Facebook, which is now calling itself Meta. As you know, Facebook has attempted several times to enter the cryptocurrency market. Starting in 2019, they founded the Libra Association, based in Switzerland, with the goal of creating a stablecoin, but suspended its activities after this committee held hearings, and I, along with other members and U.S. regulators, raised significant concerns, leading to a number of Libra Association members pulling out. Now, in partnership with Paxos and Coinbase, Facebook has launched a pilot project with its digital wallet, Nova, for a limited number of individuals in the United States and Guatemala to send and receive money using your stablecoin known as USDP or Pax Dollar. As you know, one of the recommendations in the recent President's Working Group report focuses on mitigating systemic risk posed by stablecoins as well as concentration of economic power concerns. The report, among other things, recommends legislation that stablecoin users must comply with activity restrictions that limit affiliation with commercial entities, similar to restrictions most banks face to promote the separation of banking and commerce. While your partnership with Facebook is reportedly a pilot limited to a number of users in Guatemala and the United States, what is stopping Facebook from the future allowing its nearly 3 billion monthly active users to make payments and save funds with a Pax dollar or other previously issued stablecoin through a Nova wallet? If this were allowed at such a scale, how would this not undermine the U.S. dollar and the world's reserve currency? Casarella, are you still muted? Can you hear me?
There we go. Sorry about that. Thank you for the question, Chairwoman. I think it's important to note in the case of Novi that they are a customer of Paxos just like any other customer of Paxos. We have an open product. They could use that product in the open market. They decided to come to Paxos. And I think they did that because we have the most regulated stablecoin product. And I think that was an important decision for them, that they wanted to use a well-regulated product. And I think another important point here is Novi is our customer. That's a subsidiary of Facebook Meta. But Novi itself is a regulated money services business. They are regulated to operate in almost all states in the United States. And we have done extensive due diligence on their controls and the regulatory oversight that they have. And we feel very confident that they're following those. And so in terms of the Novi usage of our product, it's just like anybody else, just like if they had a bank account, which they do, and they were using. And so in that way, the services they're getting from us are no different than services they get from any other financial institution that they have a relationship with.
And so this is supposedly a pilot that's limited to a number of users in Guatemala and the U.S. What is stopping Facebook, again, from in the future allowing its nearly 3 billion monthly active users to make payments and save funds with a Pax dollar or other privately issued stablecoin through a Nova wallet? How long is this pilot? Can you describe it?
Yes, the pilot's limited and controlled. It's something that we work together with our regulator on, and they have reviewed our program. Novi would be best position to talk about their plans to expand it. But right now, they're in a pilot phase. It's just the U.S. and Guatemala. It's quite limited in scope and size.
I now recognize the gentleman from North Carolina, Mr. McHenry.
Well, thank you.
Who is a ranking member of the committee. You are now recognized for 5 minutes.
Thank you. Mr. Brooks, let's step back from digital assets and blockchain for a moment. Let's talk about where the internet was, where it's come to, where it's going, right? We're trying to level set here for policymakers. So originally, the internet was a read-only format, in essence. We're consuming information. And then there's additional layers that we place on. It became much more interactive. But counterintuitively, much more interactive, but much more centralized in Web 1, Web 2. What we're hearing now is Web 3. Policymakers need to understand the nature of Web 3. This is a hearing about a component of Web 3. Now, along those lines, what are the characteristics that defined Web 1 and Web 2?
Mr. McHenry, thank you very much for that question. I think that's critical to understanding what we're all trying to build here. So the characteristic of Web 1, if people remember their original AOL account, was an ability to look in a curated walled garden at a set of content that was not interactive but was presented to you on AOL the way that Time Magazine used to show you the articles they wanted you to see inside of their magazine. Just you could see it on a screen. The innovation of Web 2 was that suddenly you could not only read content, but you could also write content. This is when the blogosphere became a big thing. People remember this from the late 90s, the early 2000s. The reason for the centralization of the internet, of course, was that all of that activity was being monetized by a very small number of companies. Facebook, as the chairwoman mentions, Google, and 2 or 3 other companies. What makes Web3 different is the ability to own the actual network. And that's what crypto assets themselves represent, is an ownership stake in an underlying network. So when you hear people talk about, for example, layer 1 tokens, what they mean is this is your reward for providing the ledger maintenance services, the computing power to the network that on Web 1 and 2 was done by Google, right? So now people in my hometown of Pueblo, Colorado can actually own the Ethereum network, but they can't own the internet. That's owned by Google and a few other companies. That's what the Project of Crypto is all about, is allowing people to directly own the networks that have native assets that are supporting it, and that's the nature of decentralization, where the token holders are the people who control the asset, not Google.
Token holders, for our language here on the Hill, those are digital assets, right? Which are the keys to open up the ledger for you to participate, right? So describe to us how those digital assets fit into this internet revolution, Web3.
So the concept is that you have sort of application layer tokens and you have protocol layer tokens. So if I'm an owner of Bitcoin, let's say that I'm a miner of Bitcoin, somebody who actually creates Bitcoin. The Bitcoin is the reward I receive for doing the work to keep the network operational, and that allows me to own a piece of the Bitcoin blockchain. Or take Ethereum, which is easier to understand. The Ether token represents an ownership stake in the network, but on top of that network are all kinds of apps that get built on the network, much like the apps on your phone depend on the underlying network existing that lets the phone operate. And so people will make judgments about which network is likely to win, and they will invest in the tokens in that network much the same way you might invest in Google stock because you think Google is going to scale access to the original internet. The difference being here, you can vote on what happens in the future of a proof of stake network, for example. You can get rewarded through a proof of work token for maintaining a ledger on something like Bitcoin. But the real message here is that what happens on the decentralized internet is decided by the investors, versus what happens on the main internet is decided by Twitter, Facebook, Google, and a small number of other companies.
Okay, so getting this layer on digital assets right, for Congress to understand this, everything is built upon that on-ramp to this new internet. So very important for us to be sensitive to how this develops and any actions we take in terms of laws and updating laws to incorporate these new technologies.
Yeah, Mr. McHenry couldn't agree more, and I think when you hear about all of the problems of different big tech companies, the importance of an owner-controlled network becomes clear.
Okay, owner-controlled network rather than a cooperative, right? And thinking in those terms.
Absolutely.
Right? So if you're not a part of management, you're not making a decision in Web 2. If you are a participant in the network, you're cooperating in the making of those decisions.
Exactly right.
Okay. So I ask this not to be insulting to the panel, but to have a level set here so we have an understanding of what we're talking about. This is not simply about you on this panel. It is about trillions of dollars of assets that did not exist before Satoshi wrote his white paper 13 years ago. It's about $3 trillion in notional value at this stage around the development of a whole new range, a whole new suite of technology that will be developed across the globe, whether or not the United States embraces it and wants to compete, or if it's pushed offshore. So as policymakers, we need to understand what we're talking about here. This is a small panel, important as you may be, a small panel about the discussion about Web3. And so with that, Madam Chair, thank you for having this hearing, and I hope that we can have more understanding by policymakers about these important concepts. Thank you, Mr. Brooks.
Thank you very much. The gentlewoman from New York, Mrs. Maloney, who is also the chair of the House Committee on Oversight and Reform, is now recognized for 5 minutes.
Thank you, Chair Waters, for having today's hearing. Our financial system has been built up over time with us learning from each financial crisis, fixing and adjusting as new financial risks come forward. From the Great Depression and the creation of the FDIC and deposit insurance to the Dodd-Frank reforms after the 2008 financial crisis, we may not all agree on every aspect of those laws, but they've made our financial system and our entire economy more resilient. and consumers and investors more protected when things do go wrong. In 2018, the New York Attorney General released a report from its Virtual Markets Integrity Initiative, which detailed a few key findings regarding crypto trading platforms on potential conflicts of risk and interest, lack of serious efforts to stop abusive trading activity, and limited protections for customer funds. The report stated, and I quote, "Customers are highly exposed in the event of a hack or unauthorized withdrawal. While domestic or foreign deposit insurance may compensate customers for certain losses of stolen or misappropriate fiat currency, no similar compensation is available for virtual currency losses." This is not a theoretical concern. In fact, Coinbase was reportedly the subject of a hack earlier this year, impacting at least 6,000 Coinbase customers. Ms. Haas, what happens today for a Coinbase customer in the event of a hack of Coinbase or a Coinbase wallet, or in the event of unauthorized withdrawal? What protections does a customer currently have? FDI insurance, commercial insurance, could you answer that question, please? Thank you.
Yes, thank you so much for the question. So Coinbase does secure 12% of the world's crypto, as I shared with you earlier, and we have extensive controls to protect our customer assets. We bifurcate our assets into two different storage systems. We call one the hot wallet, and we call one cold storage. And less than 2% of our assets are held in a hot wallet, which is subject of a cyber attack. Specifically, the incident you mentioned was not a hack of the Coinbase systems, but in that event where customers did lose funds due to other losses, we did reimburse customers for that event. We do protect our customers for any hack of the Coinbase hot wallet, and we have third-party insurance, plus we use our own balance sheet to protect our customers for the event of loss on our platform.
Please pull the microphone closer to you and speak into it so all members can hear you.
Thank you so much for the clarification. With regards to what losses we typically see, though, in the press, we typically see these are account takeovers at the end point, where a customer has lost their credentials and then has had a hack of their own phone, their own personal device. And that is unfortunate at this point in time because that loss is not well protected for within the broader crypto economy. That is something that Coinbase continues to study and would look to, over time, do more to support our users
Reclaiming
for
my
those
time,
losses.
reclaiming my time's very limited. Is that uniform, the protections you talked about, for all crypto exchanges and wallets, or just for yours?
I'm speaking specifically about the Coinbase protections we offer.
Okay, so it's not available to others. So do you think customers could benefit from some uniformity and standardized minimum protections if and when customers lose their funds through no fault of their own?
I do believe there's an opportunity there.
Richie? In addition to this committee, I have the honor of chairing the Oversight Committee, and we recently held a hearing on the rise of ransomware and strategies for disrupting criminal hackers. As detailed by a recent FinCEN report, $590 million in suspected ransomware payments were reported by financial institutions in the first 6 months of 2021, and it's getting worse. So it's no surprise to me that these criminals frequently seek payment for ransomware attacks through cryptocurrencies. And FinCEN identified several money laundering typologies for these actors. Ms. Dallaire and Ms. Haas, our anti-money laundering requirements are paramount to prevent fraud, sanctions, invasions, and the financing of terrorism. And you and your companies have highlighted your firm's compliance programs, stating that these standards are important to protect the financial system and to drive trust and adoption. But not everyone in this industry believes that, and many have rejected or avoided compliance standards. Some actively promote themselves on not complying with Know Your Customer requirements. This is an entire financial services ecosystem, and one weak link exposes the entire system to money laundering risks, as highlighted by the FinCEN data I just mentioned. Could you share why your firms have taken your anti-money laundering compliance approach and the benefits of doing so across your firm's products and services? And what steps can we take to bolster our anti-money laundering efforts and ensure all crypto marketplaces comply?
The gentlewoman's time has expired. The gentlewoman from Missouri, Ms. Wagner, is now recognized for 5 minutes.
I thank you, Madam Chairwoman. Ms. Haas, let's continue. SEC Chairman Gensler has indicated on multiple occasions that, and I quote, "The test to determine whether a crypto asset is a security is clear." However, Commissioners Peirce and Roisman noted that they believe there to be an obvious lack of clarity for market participants around the application of securities laws to digital assets and their trading. The lack of clarity is clear through the numerous requests that the SEC receives for these no-action letters. In your view, is additional guidance defining clear rules of the road for investors and market participants needed at this time?
Thank you for the question. We believe this is a very important area of focus for the SEC and this committee. We do agree that the laws are clear. However, existing laws, regulation, and legal precedent make it clear that blockchain tokens are not securities. So we believe that the law clearly shows that blockchain-based digital assets are one of two things: either a new form of digital property or a new way to record ownership, as Brian Brooks spoke earlier about. We do believe that clarity is needed because these are new assets. It's a new way of transacting with these new protocols that we spoke about, and I think it would benefit all of us in the ecosystem to have agreed upon definitions.
I couldn't agree more, and I would hope that Chairman Gensler would be listening to his commissioners and some of the feedback that you all are giving him. You know, we talk a lot about financial inclusion in this committee, and digital assets have the potential to provide fair access to financial services to all Americans, and I believe that Mr. Bankman-Fried brought that up, and many of you did in your written testimony. I'd like to start, and I've got limited time, with Ms. Dixon, and then I think Mr. Allaire. How would digital assets and blockchain technology facilitate financial institutions or financial inclusion and benefit the 1.7 billion unbanked people throughout the world, and particularly the millions here in the U.S.? Ms. Dixon.
Thank you for the question. This is a really important area. Understanding your time is limited, I'll just say that blockchain allows value and money to flow just like email. So it's very simple in terms of how it can get from one point to another, and it does so very, very quickly. The importance of that is it actually can cross borders much more simply than anything else that's out there today. So the value of blockchain is the ability to send from the United States, for example, and send to another country without having to reconcile with all the different software and intermediaries that exist today. So it eliminates intermediaries, it creates less friction in the marketplace, and it allows users who don't have bank accounts today or who choose not to get bank accounts or have been de-risked by banks from being able to be able to access this technology very cleanly because they can do so with a wallet.
Thank you very, very much for that input. And Mr. Allaire.
Thank you, Congresswoman. I think financial inclusion is a critical design goal for many of us, and certainly as we think about USDC, today USDC as a payment technology for dollars on the internet enables users to transfer dollars in a fraction of a second with a transaction cost that can be as low as a 1/20th of a penny, and with the throughput of the Visa network. That's a benefit that can be brought to individuals, and I'd like to really emphasize something for the committee, which is one of the most powerful things about this technology is that it is the open internet. Just like anyone can have an email account or a text message or access the internet, this is an open financial system, and when you combine those kinds of access efficiency and that openness, it creates an opportunity for anyone with a mobile device anywhere in the world to seamlessly exchange value with one another.
Great, thank you. Mr. Brooks, in your
얼라리요. 잠시만요.
An open financial system, and when you combine those kinds of access efficiency and that openness, it creates an opportunity for anyone with a mobile device anywhere in the world to seamlessly exchange value with one another.
Great, thank you. Mr. Brooks, in your
뭐지? 잠시만요. 이게 멈췄는데? 잠시만요. 이게 멈췄어요. 약 먹으니까 많이 낫네. 뭐야 이거 왜 멈춘 거야 이거? 잠시만요. 이게 얘네가 멈춘 거예요. 제가
Open
멈춘 게
financial
아닙니다.
system. And when you
이거 뭐냐,
combine
이거?
those kinds of access efficiency and that
지금 전체 다 멈췄네. 이거 전체가
Open
다
financial
멈췄어.
system.
인터넷이 어제도 사실 좀 문제가 있었죠. 어제 아마존 웹 서비스가 다운되면서 사실상 오늘 또 문제가 있을 수 있다는 예상이 있긴 했는데 맞는 것 같아요. 지금 뭔가 문제가 있네. 방송이 터졌어요.
open financial system. And when you combine those kinds of access efficiency and that openness, it
계속
creates an
새로
opportunity
고침하는데
for
저희만
anyone with a
깨진 게
mobile
아닙니다.
device
다
anywhere in the
깨졌어요.
world to seamlessly exchange value with one another.
Great, thank you. Mr. Brooks, in your
Mr. Brooks, Mr. Brooks. 난 몸 아픈 몸 끌고 이렇게 라이브 방송을 켰는데 멈춘단 말이야? 이놈의 새끼 안 되겠네. 너무 힘들어. 이거 어떻게 된 거지? 잠시만요. 한번 다시 보자.
Open financial system. And when you combine those kinds of access efficiency and that openness, it creates an
닫았어요.
opportunity for anyone with a mobile device anywhere in the world to seamlessly exchange value with one another.
Great, thank you. Mr. Brooks, in your
터졌네요. 터졌어요. 아예 터졌어요. 아예 터졌네요. 이런. 코인 하고 있긴 합니다. 코인 에이다랑 비트코인, 이더리움 이렇게 세 개예요. 오늘 진짜 몸이 진짜 안 좋네요. 원래 만약에 제 구독자분이 리퀘스트 해준 게 아니었으면 절대 못 켰을 것 같아요. 근데 이게 좀 중요한 뉴스인 것 같긴 해요. 지금 이 청문회가 많은 사람들의 이목이 집중되어 있고 사실 좀 일찍 키고 싶었는데 도저히 몸을 아침에는 킬 수 있는 상황이 아니었어요. 진짜 1시간이라도 자야 돼가지고 진짜 1시간 지금 딱 자고 일어나서 여러분들이랑 라방하는 겁니다. 무튼 지금 서버가 터졌네요. 죄송합니다. 이게 뭐 제가 뭘 어떻게 한 게 아니라 그냥 얘네 서버가 터졌어요.
Open
제가 뭐
financial
해본 게
system.
아니라.
And when you combine those kinds of access efficiency
sets the supervisory
여긴
agreement with
된다.
which we're able to then offer our products. And
CNBC로
so this was
갑시다.
a statutory requirement for us.
Thank you
CNBC
for your
된다.
answer. And can you guarantee to the global public that your product is and will continue to be
된다.
backed fully by the US dollar?
We are committed to a one-for-one backing, and we look forward to working with Congress and federal regulators on ultimately the reserve standards that are really needed for stablecoins as a financial instrument in
Thank
the
you.
financial system.
And Mr. Cascarilla?
Yes, we will always be 100% backed by U.S. dollars that are cash and cash equivalents.
Thank you. Mr. Allaire and Mr. Cascarilla, well, I do appreciate both of your decisions to back your stablecoins with cash and U.S. treasuries and voluntarily sharing this with the public. Unfortunately, an investigation by the New York State Attorney General, Letitia James' office earlier this year calls into question the veracity of the entire stablecoin industry and the statement made to the public. Ms. James' investigation revealed for periods of time that stablecoin Tether deceived clients and markets by failing to hold reserves to back their Tethers in circulation, which was contrary to your representation. So my question to both of you is, do you think mandatory reporting of your reserves to federal regulators and submitting to their regular examination is a good idea and something you will each support?
Congresswoman, I am supportive of that federal supervision and of those reporting requirements and mandates, and I think that's critical to make this a mainstream infrastructure that can benefit the U.S. economy.
Thank you. And Mr. Cascarilla?
It's important to say that we are regulated as a trust company. We are a regulated financial institution. We have been since May of 2015. We were the first one in the entire country, and we're proud of that. And so our products already have a primary regulator that oversees our issuance. That's different from everybody else.
Excuse me, maybe I omit in my question federal regulators. Mr. Allaire?
Yes, we are supportive of federal supervision.
Good. And Mr. Cascarilla?
I think federal supervision can make sense, especially for firms that don't have a state regulator that oversees their activities.
Very good. Thank you. Ms. Haas, Mr. Backman-Fried, digital asset trading platforms like yours play an important role in the current functioning of stablecoins and therefore also raise broader questions about digital market regulation, supervision, and enforcement. Can each of you describe the method your platforms use to determine the price for exchanging virtual currency for fiat currency? I see that my time has expired. Thank you. I yield back. Time? Okay. Ms. Haas.
Coinbase is an agency-only platform. We do not engage in proprietary trading on our platform. All prices established on our platform are due to market makers, so we offer a platform for customers to come together to offer bids and asks on a variety of currencies that we offer on our platform. So the market price is determined by the market participants.
And at what stage of the transaction do you provide an assurance of or lock-in of an execution price?
So we have two products. We have a consumer product, and we have what we call our pro product for our institutions or more advanced traders. It's important that any customer can choose either platform, but we tend to see consumers choose our easy-to-use consumer platform. The price displayed on the screen to the consumer is the price that's locked in and that we guarantee to the customer.
Thank you.
Thank you. The gentlewoman's time has expired. The gentleman from Oklahoma, Mr. Lucas, is now recognized for 5 minutes.
Thank you, Madam Chair. Ms. Haas, you discussed in your written testimony how the future of blockchain might include new areas of tokenization, such as property, titles, even people's time. Could you discuss further what trends you currently see and how new asset classes could arise through blockchain technology? Where are we going?
Thank you for the question. So I think it's important to share that anything can be tokenized, any item of value. And this is the Internet of Value that we're talking about with Web 3.0. So the early things that we're talking about are the protocol layer. Over the protocol layer, we see infrastructure being built, and then we see applications being built as the next layer. So Bitcoin, Ethereum, Stellar, Solana, these are all important protocol layers that we're talking about. And on top of these, we see applications. So an interesting article was published yesterday that gaming platforms, so video games that many of you may play, your children may play, gaming where NFTs, non-fungible tokens, which means they're different, every token is different. Think about a shield or a sword or something of value, are being most accurately traded. And it was a significant percent of the assets in DeFi, decentralized finance, in November were traded in apps. And so we're seeing all types of things. We've had early conversations with real estate developers to get broader global liquidity, more liquid markets for tokens. We've seen a lot of innovation in the payment space and a lot of innovation in NFTs with digital art. But this is just the tip. And I think just like back in the early 90s when we were thinking about the internet and we couldn't envision Uber, we don't know what the future is. And there's so much ahead of us.
Fascinating. Mr. Brooks, it's good to see you before the committee again. Could you discuss what key fundamental differences between banks and stablecoin issuers are important for Congress and regulators to understand when looking at regulatory proposals?
Sure. Well, Congressman Lucas, thank you so much, and it's nice to see you again as well. One of the historical differences between banks and stablecoin issuers is that banks in this country historically have been engaged in multiple different kinds of financial intermediation and risk-taking functions. Banks typically engage in 3 different things: deposit-taking, lending, and payments. The core feature of stablecoins is they're a new payments technology, and payments are one of the core things that banks do, right? So banks historically innovated in payments by first having check clearing, then later having traveler's checks, then later having prepaid cards and things like that. Stablecoin is just the faster, most modern way of transmitting those values. Stablecoin issues, of course, don't present all of the risks that banking presents. They don't typically engage in lending or anything else. And this is one of the reasons why at the OCC we looked very carefully at the possibility that payment companies like American Express in a different generation, Circle today, might possibly qualify for bank charters. They're engaged in a core banking function, but not in the other banking functions. It's to my point earlier that sometimes crypto is reducing risk, not increasing risk.
Ms. Dixon, could you also discuss this for a moment?
I think that there's a really big opportunity with respect to blockchain. I think when you mentioned before about tokenized assets, there already are tokenized interest in real estate that exist on Stellar, for example, or in fractionalized interest in U.S. stocks. So there's opportunity for growth there. With respect to what we have with blockchain and what can be accessible that banks already have available out there, but when they de-risk populations and they de-risk individuals out of the banking infrastructure, they can actually access accounts, hold their assets in a digital framework, and then do a lot of the same things that you can do at banking institutions, but these individuals couldn't get access to it before. So I think blockchain creates that financial inclusion that we're all talking about and that we all want to get to. And it does so, I think, as Ms. Haas indicated, with the different layers, the infrastructure layer and the application layers. There's so much creativity that's happening now. So I think we have a long road ahead of us with respect to this technology.
Mr. Bankman-Fried, could you respond to the criticism that stablecoins would be ripe for illicit financial activity, and could you compare this risk with other payment rails?
Thank you, Congressman. We, as do most market participants in the digital asset ecosystem, have advanced surveillance techniques to prevent financial crimes for all digital assets, including stablecoins, conducting know your customer policies and blockchain surveillance on all users and deposits and withdrawals through our platform. And all legitimate stablecoin issuers, in addition to that, conduct sophisticated know your customer policies on all issuances and redemptions of those stablecoins. If you compare that to, for instance, physical cash, where no transactions effectively have know your customer or anti-money laundering or anti-financial crimes surveillance on them, already I think that the digital asset industry has set a pretty strong standard on that front.
Thank you. Madam Chair, I yield back.
The gentleman from Texas, Mr. Green, who is the chair of the Subcommittee on Oversight and Investigations, is now recognized for 5 minutes.
Thank you, Madam Chair, and I thank the witnesses for appearing as well. I trust that my volume is such that I'm being heard. If you can verify, I would greatly appreciate it.
We can hear you very well, Mr. Green.
Thank you very much, Madam Chair. In the last year, the digital asset market has exploded from about $500 billion to $3 trillion. And there's still extreme volatility, it seems, in this marketplace. Bitcoin, for example, lost half of its value over 2 days in March. And it rebounded, of course, later on. But there are many problems leading up to the global financial crisis that seem to be manifesting themselves in the market currently. Easy credit via margin investing, lack of transparency, the lack of transparency that I'd like to see, and adequate financial disclosure is not readily available. With the explosive growth in cryptocurrencies, at what point should we become concerned about the possibility of a bubble? At what point should we become concerned about the possibility of a bubble? Let's start, if we may, with Mr. Brian Brooks.
Well, thank you, Congressman Green. It's terrific to see you again, and I always find your questions extremely perceptive. What I would say about that question is a lot of the price volatility of cryptocurrency has to do with the early stage of the market and the thinly traded nature of the asset compared to, for example, U.S. real estate, global equities, or anything like that. I think the message I'd land with this committee in response to your question, however, is some of the things that make U.S. equity and debt markets more stable and less volatile have to do with the fact that there's a lot more price discovery in those areas. And what I mean by that is in the US, we have regulated equity mutual funds. We have derivatives products and futures products that allow the free trading on a 24/7 basis that provides the market with forecasts of what's happening in the ecosystem. In the world of crypto, the US hasn't responded by developing those tools for price discovery yet. And so the result in a relatively new, relatively thinly traded market is that one person unwinding their position can have a massive effect on the price. The last point I would just make very quickly is something like 80% of Bitcoin holders have never sold a Bitcoin. And so when you hear about a day when there was a giant price drop in Bitcoin, often it turns out that there was one or two large traders who were unwinding a leveraged position, and the vast majority of holders have enough confidence in it that they've literally never sold a unit of it. So I would argue we need more liquidity and more price discovery to tamp down volatility, not less.
Thank you. Let's go to Ms. Dixon, please.
Thank you for the question. I think from the standpoint of what's available in the market today, one of the things that we need to do better in this industry, and I think we're working in that direction, is much like the early days of the web, we need to focus on consumer-oriented products that have a lot of information about the challenges and also brings the person through from a literacy standpoint so they understand. You look at user experience, you look at UX design, all of these things are really, really important. And as we saw in the early days of the web, it happened. It came together. We became better at educating the audience about what's available and what's out there. The nice thing about blockchain is you have immutability. You have records that are out there that can't be changed. This information is already leveraged by Chainalysis, for example, in Elliptic, to demonstrate the different things that are happening on chain. And I think it allows us the opportunity to create a lot more foundational efforts with respect to user experience and focus on these consumer protection issues that you're talking about.
Mr. Samuel Bankman, if you would, please, like to hear from you.
Thank you for the question. One of the really innovative properties of cryptocurrency markets are 24/7 risk monitoring engines. We do not have overnight risk or weekend risk or holiday risk in the same way traditional assets do, which allow risk monitoring and de-risking of positions in real time to help mitigate volatility. We've been operating for a number of years with billions of dollars of open interest. We've never had customer losses, clawbacks, or anything like that, even going through periods of large movements in both directions. We store collateral from our users in a way which is not always done in the traditional financial ecosystem to backstop positions. And the last thing that I'll say is if you look at what precipitated some of the 2008 financial crisis, you saw a number of bilateral, bespoke, non-reported transactions happening between financial counterparties, which then got repackaged and re-leveraged again and again and again, such that no one knew how much risk was in that system until it all fell apart. If you compare that to what happens on FTX or other major cryptocurrency venues today, there's complete transparency about the full open interest. There's complete transparency about the positions that are held. There's a robust, consistent risk framework applied, and we're excited to work with the CFTC on our U.S. licensed and regulated venue to bring a lot of this to U.S. customers as well.
Thank you. My time has expired. Thank you, Madam Chair. I yield back.
You're welcome. The gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Madam Chairman, thank you very much. And to the panel, we appreciate this opportunity to hear from you. I think it's very important for us to hear from you. You're not the inventors necessarily, but you're the people that are going to make this work. I am tremendously impressed that from what I see, a lot of ingenuity, a lot of entrepreneurial spirit, and lots of advice about the future, about where this can grow is, I think, very important for us to listen to. I'm in favor of what you do. I'm not sure I want to go as far as you do on robustness of how much oversight you really want, because I think that in your perhaps infancy, perhaps in your modeling, what makes you better is what you are, and I respect that. The question I would ask, and I don't know which one of you to ask this, so I would just say we're always interested in a traditional financial model of identifying risk. What is What is a risk? We get very little into value, but a lot into risk. And so I would ask you that the value of much of this could be compared to stocks, IPOs, when they first come out. They might come out and be worth this amount of money, and 1 year later they're worth a lesser amount of money. I'm more concerned with the term fraud, of the value that we're selling of all these different positions that could be held. What do you do to try and look at what might be fraud? I know there's been openness about, a lot of discussion about how you allow information to be freely gleaned, you do these things, but is there an investigation or an understanding about what might be risky even though you accept it, or fraud? Anyone?
I'm happy to take that one, Congressman.
Thank you very much.
So I want to share a little bit. This is specific to the Coinbase platform. So on the Coinbase platform, we have various tools. One, in onboarding, as we've talked about, we do KYC, but also in when we onboard our assets. So we offer, as I mentioned, over 100 assets for trading on our platform. We have a robust assessment of each of those assets. We're looking at it for legal risks. Do we think it has the contours of a federal security? We do not list securities on our platform. 2, we're looking at it for compliance reasons. Is this a scam? Are there real people behind those?
Right.
Are there people behind them on the OFAC list? We don't want to list that token. So we're doing a full compliance review of the founders of the coin, the developers on the project, and then we're looking at it from a security risk. Can we safely secure and store this on our platform, or is there underlying technology risk that would be rising to a hack? So one way we look at fraud is when we list an asset to make sure it's not a fraudulent asset. 2, through our market rules, we do have traditional exchange rules for looking for spoofing, for wash trading, for all sorts of market manipulation on our platform, that we have third-party tools as well as employees that came from former regulators or from traditional financial services that do 24/7 monitoring. Much like Mr. Bankman-Fried responded to the risk models, we do compliance monitoring on a 24/7 basis. We also then monitor the blockchains. One of the wonderful things about this technology is the transparency. And so we can look for transaction activity, look for patterns on the blockchain, and then we partner with law enforcement. We file SARs, and we have traditional approaches, much like you would see in finance, but the transparency really changes what we can do here.
I think that's a key, at least to me. If you knew anything about the Medicare system, you have Medicare providers, and we have probably 18% fraud. In that system, that is a federal system that's been well understood. Wherever you open up your door, whatever your storefront is, there's somebody there that's going to try and find a way to take you, to spoof you, to take advantage of this. And it seems like to me that is something that if you have accepted this as part of the duty that you have to make sure for the integrity of your system, it seems like to me that I have satisfied myself that what you have not just have ongoing, but where you think you want to go, we need to be supportive of you. We need to look at you as less of something that we ought to get in and understand and tackle you and hold you back, and more to what we believe the future should look like for people around the world and people in the United States. I would simply say to you, I encourage your integrity. I encourage you to avoid the pitfalls that come from there being some fraud that was hidden for a long period of time, and the industry knew it. We've seen this happen in companies. I don't need to go through that, where fully vetted market individuals still did something wrong. So, Madam Chairman, I want to thank you for doing this today. I think it's good for all of our members, and I in particular want to thank my ranking member for his proactive viewpoint of Republican members that I hope would be supportive of what you're saying today. Thank you very much.
You're certainly welcome. Thank you. The gentleman from New York, Mr. Meeks, who is the chair of the House Committee on Foreign Affairs, is now recognized for 5 minutes.
Thank you, Madam Chair, and I want to thank you, too, for putting together this very, very important hearing. Look, the future is in innovation and financial industries is just unavoidable, and to get ahead of it So your foresight, along with the ranking member to do this, is really important. Let me first ask my question to Mr. Alier. As you may be aware, communities of color often rely on minority depository institutions and community development financial institutions to safely do business and get access to crucial banking needs. And given their important role as well as the challenges that they face, I've been a long advocate for robust partnerships whereby MDIs and CDFIs can leverage new technologies to better serve their communities, as well as I applaud Circle, actually, for using and exploring such partnerships and creating an initiative to deploy and share USD coin reserves into these MDIs and CDFIs, enhancing financial inclusion. So my question really to you is, can you provide us a status update on where Circle is in implementing this program and what sorts of systems will be developed to ensure the long-term success of the program?
Thank you, Congressman Meeks. I appreciate the question very much. For those on the committee that are not familiar, we recently announced a new broad-based company initiative called Circle Impact. It includes several key initiatives. First and foremost, something I did reference in my testimony as well, is an initiative to take what we hope will be billions of dollars of the deposits that are held behind USDC and actually place those with minority deposit institutions and community banks throughout the United States. I think one thing that's important to understand is that unlike a bank that wants to maybe hoard its deposits for its own lending business, as a full reserve model, we're not in the business of lending. And so it's a tremendous opportunity for us to work closely with banking institutions that could benefit from strengthened balance sheets, that could benefit from what that can then do, what that in turn can do to open up credit and lending and other opportunities in these underserved communities. So this particular initiative is one that we've just began. We expect to have the first wave of that in place by the end of the first quarter. We are also looking to coordinate with federal banking regulators who have their own initiatives that are focused on supporting MDIs and community banks. And we view this as a really critical and strategic part of what we can do to foster a more inclusive financial system. Final comment is simply that we believe that the technology of digital currency, the frictionlessness, the way in which individuals with mobile devices can actively participate, and not just domestically, but interacting with family members around the world and safely exchanging value, that these can also bring significant benefits to these communities. And we will certainly keep the committee up to date on progress with this initiative.
Well, thank you very much for that. And let me go to Ms. Haas real quick. You talked about technology enhancements, and I know that crypto and digital currencies can bring to our financial markets that they're really impressive. For example, I know a lot of communities rely on these new modes of payment systems to send money to their families in their home countries. And, this type of activity is, of course, extremely useful to our global economy, which is really important. But there are also bad actors out there that could use crypto or digital currencies to hide cash from illicit activity. Also, people can hide cash, not to pay their support payments and other things. So my question is, how can we, and what is being put in place to keep the bad actors out there? And so, I know in your testimony, Ms. Haas, you mentioned that there's a small amount of non-compliant foreign exchanges where criminal actors benefit financially from illicit activity. So what's your assessment of our global coordination on stamping out such activity, and what more can the United States policymakers do to better coordinate with regulators across shores to prevent this arbitrage that you referred to?
Thank you so much for the question. So as I shared on the Coinbase platform, we do have KYC, a BSA AML program, and we ensure that we know who our customers are and then have clarity on those transactions. I know other U.S. regulated exchanges that we speak to have similar controls, and everybody on this panel here today, I think, shares those views. There are players who do not follow these, and I think that that is where regulation should be focused, to make sure that there's an expectation on what it is to perform as a digital asset marketplace, and that was part of our policy proposal.
The gentleman's time has expired. Thank you. The gentleman from Missouri, Mr. Lukemeyer, is now recognized for 5 minutes.
Thank you, Madam Chair. In 2019, the average daily turnover value of the U.S. dollar constituted 88% of foreign exchange market transactions globally. This dominance by the dollar in global marketplace is a key reason why the dollar remains the reserve currency of the world. Mr. Brooks, welcome back to the committee. It's good to see you again. I think we've actually talked about this subject before in the past. But as digital assets become more common in the global marketplace, with the total digital asset market reaching almost $3 trillion, as Ranking Member McHenry just said, how do we ensure the U.S. dollar remains the reserve currency?
Well, Mr. Lukemeyer, it's terrific to see you again, and I'd give you a couple of thoughts on that important question. One is, if we start with stable coins before we talk about other crypto assets, I've said for a long time that the secular reduction in dollar holdings as a percentage of global central bank holdings is alarming. And this has been going on for more than 10 years at this point. So dollars as a share of the European Central Bank, the Japanese Central Bank, et cetera, has shrunk from 80+% to more like 60+% in a short amount of time. What that tells me is that in the future, with the rise of China and other major economies, the US dollar can't take its primacy for granted, and we need to start thinking about competing on utility, on features, not just based on a post-World War II monetary system that we could take for granted for the last 2 generations. And that's one of the reasons that I've been such a supporter of internet-enabled dollars, which allow us to compete on features, not only on history. I think that's really critically important. The second thing I would tell you is, as we enter year 11 or 12 of a highly inflationary environment, after all, we've been printing enormous numbers of new dollars since the financial crisis, there will come a time, gradually then suddenly, when the attractiveness of the dollar relative to other currencies could change. One of the benefits of the crypto economy is that it creates some counter incentives on the part of the Fed to do that kind of policy, because people will flee to other kinds of assets. And that sort of market competition is something that I think will ultimately shore up our monetary policy and keep the dollar where it rightfully ought to be, which is as the dominant reserve currency it's been for all of our lives.
Yeah, it's very concerning to me that if we lose that position where our economy, our whole country, our way of life is at risk. Mr. Allaire, you made a comment in your testimony with regards to promoting the dollar as a primary currency. I assume you've got a thought on this as well.
Thank you, Congressman. Absolutely. I think, as I introduced in my initial remarks, we're at a really interesting moment in time. We're seeing this infrastructure layer, these blockchains, proliferate globally at incredible speed. It seems likely to us that the ability to access and interact with these blockchain networks will reach billions of users over the next 2 to 3 years. And the question is, in that time frame, will the United States support the dollar and digital dollars in the form of stablecoins, because they're in the market and operational today, to help the United States dollar be the competitive currency of the internet? I think that's the opportunity. I think it's in front of us right now. And it's one of the reasons why we're so focused on this as a national economic, and not just a national economic priority, a national security priority, because clearly, if this is the new infrastructure, economic infrastructure of the internet, we want the dollar to play a critical and strategic role. And partnering closely with private companies and using open internet technologies becomes a way for the United States to compete versus states that are seeking to nationalize that infrastructure, operate it themselves in a surveillance-oriented model.
Well, it's interesting that you were talking a while ago, I think Ms. Velasquez asked questions about reserves, and I think you were talking about basically a one-to-one amount of backing of your coin, of your asset with U.S. Treasuries. So you're looking, I think, at the value of your that you're backing up your digital coin with is basically the full faith and trust of the United States government. Would that be correct?
That is exactly correct. And I think, in many respects, the assets that back these dollar digital currencies are in many ways far safer than the dollars in a bank account, because dollars in a bank account, as we know, are fractionally reserved and lent out. And so this is
I don't interrupt, but I got one quick question for Mr. Brooks with regards to, you talked about a minute ago with owner controls the network. We had Mr. Zuckerberg in here when he was trying to talk about his Libra. And the control of that, the value of it was going to be with a commission. My concern is who controls the internet. We've seen Twitter, we've seen Instagram, we've seen Facebook control people on their platforms. How concerned are you about outside forces controlling the platform on which the digital dollar is traded?
Well, Mr. Lukemeyer, I'll do you one better on your hypothetical, which is we've now seen major banks deplatforming both industries and individual customers for not sharing the right point of view. So these are scary ideas. The point of crypto is to have true decentralization, and the projects that succeed will be the projects that achieve that. Bitcoin succeeded because there are literally millions of participants in the node network, and so there is no CEO of Twitter to deplatform you, there's no CEO of JP Morgan to take away your credit card. It's user controlled. Some of these won't achieve that. They'll be consigned to the ash heap of history, I predict.
Thank you very much. I'll yield back, Madam Chair.
Thank you. The gentleman from Colorado, Mr. Perlmutter, who is also the chair of the Subcommittee on Consumer Protection and Financial Institutions, is now recognized for 5 minutes.
Thanks, Madam Chair. Mr. Brooks, good to see another Coloradan on the panel. But I want to start with a couple questions for you, Mr. Bankman-Fried. And Ms. Haas mentioned knowing your customer. They avoid getting into the securities transaction business to the best of their ability. That's one of the things they look for. So, Mike, I've got several questions for you, and then one of them will be from completely left field. All right? So get ready for that one. Cryptocurrency market exchanges such as yours are regulated through a patchwork of different state and federal agencies. For instance, some exchanges register as money services business with FinCEN at the federal level and may also receive money transmitter licenses, and you talked a little bit about that in your opening. How is your company registered in this context?
Yeah, thanks for the questions, and looking forward to the left field question at the end. In addition to a bunch of international licenses, in the United States, we are participating in that system you referenced with the money transmitter and money service businesses licenses. In addition to that, however, we are also licensed by the CFTC. We have a DCO, a DCM, and other licensure from them through FTX US derivatives. And we look forward to continuing to work with them to build out our product suite. We just submitted a 800-page, I believe, proposal to them a few days ago, which we're excited to discuss. And we're also happy to talk with other regulators about potential products in the United States.
All right, well, let's talk about another regulator that may touch on what you do. You talked a little bit about derivatives and the fact that derivatives were, sort of a key component in the failure of the financial markets back in 08 and 09. Is FTX registered with the SEC?
So the core derivatives regulator is the CFTC, and FTX US derivatives is registered with the CFTC. With the SEC, we have begun discussions there and excited to continue discussions there. We do not list securities on our platform as of now, although we would be excited to explore listing digital asset securities in the future under the guidance of the SEC. I will also say briefly that I would be excited to see a unified joint regime with both CFTC and SEC involvement to create sort of harmonious markets regulations between spot derivatives contracts and other things.
All right, now the left field question. So, our role here, there's nothing new under the sun. The technology may change. It may speed things up. It may make it more transparent, but a deal's a deal. Who's taking on the risk? Who's getting rid of the risk? Who's the middleman? So one of the things we hear about blockchain is that it's invulnerable, it's impenetrable, it's something that's super secure. And our responsibility is to make sure that things are generally safe, generally honest, that people aren't swindled. So I also sit on the science committee with Mr. Luchtemeier, and the ranking member was talking about we're at W3, all right? In the science committee, we're doing a lot on quantum computing. And so my question to you is, what threats or benefits to a blockchain system will come from quantum computing?
Well, thank you for the question. In terms of the threats, some cryptographic algorithms are not, at least theoretically, might not be secure under quantum computing. Obviously, this is going to depend on the exact details of what comes. And it's important that, if and when that comes, that, blockchain security algorithms are resistant to that. On the same front, I think it has the potential to create, basically new cryptographic algorithms that are faster, that are more secure, and that are, more efficient from a number of different perspectives. So we'll see what happens there.
All right, I have a million other questions, but I don't have enough time to ask them. I'll yield back.
Thank you very much, Mr. Perlmutter. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Thank you, Madam Chair, and thank you for holding this important hearing. Mr. Brooks, good to see you back in front of our committee, and to all of our witnesses, thank you for your testimony. Mr. Brooks, I will start with you, and this is a bit of a follow-up to Ms. Wagner's question, but do you think Congress needs to introduce legislation to provide more definitional clarity with respect to digital assets? And if so, do you have any specific suggestions?
Well, I really appreciate that question. That is the most important issue in the short term for the industry. And so let me just pick up where Mrs. Wagner left off. If the question is the current test clear, it's clear in the sense that we know what it is. It's not clear in that it's a four-factor balancing test. So I often think about what like the U.S. trucking industry would be like if the truckers didn't know that the speed limit was 75 miles an hour. They just had a four-factor test of general safety having to do with how much sleep they got the night before, the overall size of their payload, and other factors. People need to know what the speed limit is. In my old agency, the OCC, what would happen is a bank would come to us with a new activity proposal, and we would give them an answer. We would either give them a non-objection or we would not give them a non-objection, and it was very clear whether they would be allowed to access that. What happens in the United States is you have a new crypto project, and you walk into the SEC and you describe it in great detail, and you ask for guidance, and they say, we can't tell you, and you list it at your own peril. So whether this comes from legislation that defines what is a security and what isn't a security, or whether it comes from Congress in the form of legislative discretion to an agency to say what is a security, I would argue that a four-factor balancing test is no better here than it is as truckers drive down the highway guessing what safe is.
Yeah, and Chairman Gensler has been quoted as saying the test to determine whether a crypto asset is a security is clear. Mr. Brooks, do you agree that that test is clear? I take it from your previous answer, the answer is no. But could you walk me through the process that exists today to determine if a digital asset is a security?
Yeah, well, thank you for that. The best test that is out there is a test that several of us on this panel actually helped to develop about 3 years ago as part of an industry organization called the Crypto Rating Council. When I came to see several of you several years ago in connection with the Crypto Rating Council, the way I described it to you was it's sort of like motion picture ratings for crypto. We don't know authoritatively what's a security and what isn't because no authority will tell us. But what we can do at least is we can tell you the difference between an R-rated asset and a PG-rated asset, and people can make their risk tolerance judgments. So the way that process works is it's an objective, quantitatively based process that asks several dozen questions about the asset across each of the dimensions of the Howey test. It gives you a number, and that number tells you how close you might be to danger and how far away you are.
Let me interrupt and just say, I recognize that some rules or federal regulation of both digital assets and cryptocurrency trading platforms might be supportive of bringing clarity, but I'd never underestimate the ability of the federal government and regulators to stifle innovation. Can you give me an example of an overreach that would stifle innovation?
Well, the idea would be to say to let traveler's checks exist inside the banking system and not bring a stablecoin issuer inside the banking system when they've applied.
Okay, Mr. Lair, to you, can you talk about the difference between a stablecoin versus a central bank digital currency, and what advantages does a stablecoin offer that a digital dollar say at the Fed, would not be able to offer?
Thank you, Congressman Barr. I'm happy to. I think the first difference is that stablecoins are operational and growing in the market today, and they're built on an open internet technology model. So when we think about all of the things that we've seen built on the open internet, on these open protocols and networks, whether it's ubiquitous information exchange, communications, interaction around the world, that same open internet model is the foundation for stablecoins. And so I think that's a fundamental difference. A CBDC, which is a concept right now, it's not operational, would very likely be a very closed-loop technology that's tightly administered and run by the government, and would unlikely be accessible in the same way that these open networks are accessible. And so I think that's a critical difference. But I would come back to the most important, which is that most payment system innovations in the world have been driven by the private sector. And I think what's taking place today with digital currency is no different.
Could stablecoin and your product, could it address some of the concerns about China's advances in terms of, and the threat that China's advances pose to sanctions enforcement and protecting the dollar as the world's reserve currency?
I think so, yes. I mean, coming back to this, and I'll try and make this point concisely, the United States and the US dollar is winning the digital currency space race today. Dollar stablecoins are doing trillions of dollars of transactions. The experimental beta of a Chinese yuan, which is government controlled in China, has done $10 billion of transactions. So the United States is winning. This has the potential to grow at a very significant speed around the world and benefit the US dollar and benefit American businesses and households. And so I think that's one really, really critical thing to understand. And I think the primacy of this infrastructure and the development of this infrastructure, it is a strategic national security and national economic priority for the United States, and we need to get going on it right now.
Thank you. I have many other questions as well, but my time has expired. Thank you, Madam Chair.
Thank you very much. The gentleman from California, Mr. Vargas, is now recognized for 5 minutes.
Thank you very much, Madam Chair. I appreciate very much you bringing this to our attention. Appreciate the ranking member, everyone participating today, especially the witnesses. One of the things that's been interesting, I've heard a lot of very high and noble motives today. I think I don't want to misquote people, but I've heard that the digital asset world, the open internet model, it's for all people in the world. It's easier, cheaper, open, free market data. It's transparent, reduces risk, not increases risk. There's less friction in the marketplace. These things are all great, but it's interesting that most of the people that I know that have invested in cryptocurrencies, not because of that, it's because they think they can get rich quick. And the appreciation of Bitcoin is something that they want a part of. It's not because of all these other wonderful things that the internet can do. It's not the reason at all. Secondly, it's interesting when I ask them, well, you know what cryptocurrency and digital assets and Bitcoin, what it actually is. Most of them say, no, I just know that, make a lot of money and I want to invest and I want part of it. I want to be able to invest because I know that that's appreciated. Now, we've seen this before, unfortunately, and it led to, I think, a financial crisis around the world when you were investing in derivatives and other things that people didn't know what the hell they were investing in, and then it became very problematic. So I do see the risk in this. Now, I have to say, when this was a B problem or a B issue, $1 billion problem, didn't seem as such a big deal. But now that it's become a $1 trillion issue, and I do think it's challenging really the supremacy of the dollar around the world, I do think it's potentially a big problem. I do have concerns. I want to follow on to what Mr. Barr said. The issue of the dollar being the reserve currency, this seems it does challenge it. Does someone want to comment on that? If not, I'll pick on somebody in particular.
I'm happy to comment, Congressman. I wanted to respond to a couple things in your comments. I would agree with the fact that there are passerbys, and then there are people who are actively building and who are very, very close to the technical innovation. And I think like investments in technology companies or in other businesses that we see in the stock market, you have people who are investing because they think it's a business or a product that might go up. They may not understand the details of a given pharmaceutical company's science, but they believe that perhaps it's an area of innovation and they want to invest in it. And so I do agree that there is that distinction. But I think it's certainly incumbent on all of the industry participants to ensure that there's great amount of disclosure, financial literacy around these products. But more importantly, coming back to the comment about the dollar, I think there is this growth in digital assets as a new kind of asset class. And I think what's important to note is understanding those in contrast to fiat currencies. Many of the digital assets, in fact, I think the overwhelming majority of the digital assets are commodities that have utility, that are used to power some kind of technology network or protocol, more thought of like an oil or gas than a fiat currency. So they exhibit those properties. And I don't think those will ever rival the dollar. I think they'll grow in value because they're utilized to help facilitate all kinds of activity on these Web3 applications and networks. And I do believe that with innovations like stablecoins and dollar digital currencies, we could actually see a dramatic amount of growth in the use of the dollar globally.
I'm gonna reclaim my time just for a second, because one of the things that I see is that we do have we have the digital dollar already. I mean, the digital dollar can do all the things that you guys were talking about today, with the exception that it is a fiat currency that wouldn't be as easily manipulated by some nefarious group, because it would be controlled by the Fed and the United States of America. I mean, I do have great apprehension that you have these cryptocurrencies that are used by drug traffickers, or used by people trafficking other human beings, and there's no good way to control it. So I'm all for digital currency, but why not the dollar? Why can't the dollar be the digital currency? Why can't we once again dominate not 60, 80%, but maybe even higher with a digital dollar? That to me makes much more sense, and it's much more protected, and people won't have the risk. But anyway, I yield back my time, but I did find this a very interesting discussion. Thank you.
Thank you very much. The gentleman from Texas, Mr. Williams, is now recognized for 5 minutes.
Thank you, Madam Chair. And for those of you who don't know me, I'm a small business owner in Texas, and still own those businesses. I'm a car dealer and a former professional baseball player. And when I'm trying to wrap my head around a new topic like cryptocurrencies, I try to relate it back to something I understand, like baseball or business. Now, some of you may know this, but modern-day baseball can really be attributed to Babe Ruth. He brought in the live ball era of the time and introduced power to the baseball diamond. And before this, teams would play small ball that was very conservative, where teams would literally play for one run a game. The entire objective was simply to get the ball in play so they could try to steal their way around the base paths. And there was nothing wrong with this old way of playing, but when the White Sox won the World Series in 1906, the entire team had a total of 6 home runs all year. But Babe Ruth came along. Babe Ruth came along and totally changed everything. In 1920, he set the American League record of home runs with 54. To put that into perspective, how fantastic this feat was at the time, the previous mark to be set was by Sox Siebold in 1902 with just 16. This introduced an entire generation of new baseball fans, and for the first time ever, the New York Yankees, over 1 million fans came to see them in a single season. Now, with that being said, many of you are becoming the Babe Ruth in the financial space, services space. You're introducing a blockchain technology to the financial services industry and working to upend the tradition and the traditional way of doing business. And while many economists and so-called experts have been calling on the downfall of cryptocurrency and discounting the future of blockchain technologies, all of you were working tirelessly to create something new in order to bring this new technology to the masses. Unfortunately, it would only take a few misguided curveballs, we'll say, from Washington to undo some of the progress you've all put into this motion. So my first question to you, Mr. Brooks, can you talk about some of the negative consequences that could happen if we take a heavy-handed approach to regulating this developing technology?
Well, Mr. Williams, as a long-suffering Dodgers fan, I share a lot of the things you're talking about. And I think the era you're talking about was an era when baseball went from focusing on not losing to an era where it focused on winning. And winning and not losing are not the same thing. So I come back to Mr. Vargas's question a second ago, which I think is the right way to answer your question. You know, Mr. Vargas asked the question of people have the potential to lose a lot of money. These things are volatile, they're risky. How do we protect them from those kinds of issues? There are two ways of answering that. One is to prevent as many people as possible from accessing this amazing technology. For example, the way the current legal regime works is certain kinds of assets can only be purchased by accredited investors, meaning rich people. So the only people who can get rich on this are people who are already rich. That'd be one way of protecting people from losing money, is to make sure that only the richest can access it. Another way of addressing it would be to make it safer the way that we made equities safer 40 years ago, right? We created mutual funds, diversification, sector funds, and other things that make it easier for regular Americans from places like my hometown in Colorado to buy equities without having to be stock experts. Strangely, in the US, we've refused to do that so far. So we don't allow crypto mutual funds. We don't allow people to diversify the way that they do in Canada, Germany, Singapore, the United Arab Emirates, and a series of other regulated economies around the world. So I would argue the way to win is to bring more people into the system more safely, not to keep them out at their own peril.
Great. Second question, we often hear that crypto industry is the wild, wild west, where there is no regulation guiding the industry. But as all of you are aware, that simply is not true. The SEC and the CFTC are the primary federal regulators, and our states also have strict regulations that all of you must be abiding by. So, Mr. Bankman-Fried, can you discuss the different layers of regulation that FTX must abide by as an exchange, and also in order to uphold customers' deposits in your digital wallets?
Yeah, thank you for the question, Congressman. And, putting aside the 190 other regulatory jurisdictions that we take part in and the dozens of licenses that we are acquiring each month in all of those, in the United States, there is the sort of state-level money transmitting license regime with, money service business and MTLs, which, we and many others are part of for any margined or financed or derivatives transactions in the United States. There is a CFTC regime where, there's licensure required to offer those products. For any products that might be a security as a digital asset, there doesn't exist a current very clear pathway for it, but that would be an SEC registered regime for it. Obviously, there's been lots of discussions about additional registered regimes for stablecoins and other assets as well.
Thank you. I think my time is up, Madam Chairman. I yield back.
Thank you very much. The gentleman from Illinois, Mr. Caston, who is also the Vice Chair of the Subcommittee on Investor Protection, Entrepreneurship, and Capital Markets, is now recognized for 5 minutes.
Thank you, Madam Chair, and I came up vastly before I thought I was going to, which means that you'll have to humor me for my ill-formed thoughts. I really appreciate our witnesses coming here, and I also feel terrible for you, because we could have an entire hearing on stablecoin, we could have an entire hearing on blockchain, we could have an entire hearing on CBDCs, I suppose, and we could probably have an entire hearing on whether or not things that have forced scarcity are inherent stores of value, except that I think we resolved that 100 years ago, but yet we still sort of need to debate it periodically. All that said, I want to start just focusing on stablecoins, if I could. And Mr. Allaire, want to start with you, and I'm sure you've seen the Presidential Working Group's report, raising all sorts of issues with stablecoins, primarily around do they really look like money, right? Do they have sufficient reserve assets behind them? What are the redemption rules? Is there transparency around permissioned blockchains, the custody of reserve assets? You've read the report, I'm sure. I see you nodding, could go on. First question is just really simple. Do you support the recommendations of that report for stablecoins?
So I support a number of things, but not uniformly. I think there are a number of challenges with the report. I think the first maybe to discuss is really this question of what form of federal charter ought to be in place around a large-scale dollar stablecoin issuer. I think the report recommends that it would be an insured depository institution, but I think one of the really critical things to discuss there is an FDIC-insured bank is FDIC insured because the bank is taking risk with deposits. And so,
and if I could, and I'm apologize to cut you off, but I want to just narrow sort of specifically to the issue of if I deposit something in a bank that is indexed to $1 and I perceive as a customer that this is, I've eliminated the FX risk, right? But now I'm left saying, is it actually there when I want it and are there sufficient service? Setting aside how we get it done, broadly speaking, are you supportive of the idea that if this is going to look and feel and attract investors with the expectations that this has all the risk and liquidity profiles of $1, that we should make sure that it actually has those features?
absolutely. So full reserve, disclosures, transparency, I think definitions around what those reserves are and the liquidity mandate on it, those are all really critical features that need to come in place. If it's full reserve, is it an FDIC insured product or is it a statutory set of constraints around what the reserves are? So those are some of the things that I think have to be worked through.
And I want to get to two more questions, so apologize if I'm being quick, but in the absence of those protections being in place, it seems to me that somebody who is currently holding a stable coin perceives that they are holding a currency, but in reality is holding something that is subject to a lot of exogenous risks beyond their control, which feels a lot more like a commodity. So if we agree that as of right now, it's not really a currency, would you also be supportive of saying, well, we should regulate it as a commodity until such time as we have the protections in place to give it the robustness of a currency that the market is expecting of it?
So I don't agree with that, but I think it raises a couple of key points. So the first is, and I can only really speak on behalf of Circle here, USDC, for example, operates under the same stored value electronic money and electronic money transmission statutes that govern Square and Stripe and PayPal and the balances there. So today, there are consumer protections. There are reserve requirements around holding of those assets, one-for-one redeemability, anti-money laundering requirements, surety bonds that need to be posted to protect consumers, segregation of client funds and for benefit of customer accounts. So there's a great deal that's there. And we have operated under such statutes really since 2014. We were the first company to go and get all those licenses. So there is a framework today. I think as these get larger and are operating at a global scale, I think really it's, does there need to be something more that's more bespoke to this?
Let me, if I could, because I'm just nervous watching the time here. Let me sort of get to the last question, leave it to the whole panel, and if we're out of time, we'll follow up separately. The concern I have is that a stable coin at some level is an ETF, right? And we could imagine a stable coin indexed to all sorts of different currencies and some kind of baskets of currencies that are behind there. And we regulate those in certain ways with expectations of who is bearing the risk, to Mr. Perlmutter's question. We have this emerging world of central bank digital currencies, and I'm satisfied that no central bank wants to allow counterfeiting. They all want to protect the integrity of their currency, and so they'll put those rules in place. On the other hand, different countries are going to have very different ideas about what kind of data they would like to track when we trade a central bank digital currency. And so, a question for any of you who feel technically competent to answer this: if you have a stable coin that includes some portion of central bank digital currencies that are tracking things that we as Americans would not like to track, can we design the stable coin to insulate the contamination of that system so that somebody who believes that they are buying something that looks like $1 is not actually being tracked by our adversaries? Anybody like to comment on that?
I'll make one quick comment, which is one of the benefits of this technology is these stablecoins, all of the code that they provide and how they interact is all public and open source. And so everything that functions inside of that is visible to everyone that interacts with it. And so there is the ability to have, I think, greater transparency into how are these things functioning, including a foreign issued coin.
I'm out of time, but I do have some, I think there's some
Gentleman's
concerns
time
about the
has
encrypted
expired.
rules as well. Thank you. If anyone would like to follow up, I'd love to.
The gentleman from Ohio, Mr. Davidson, is now recognized for 5 minutes.
Thank you, Madam Chairwoman, and thanks to the ranking member, thanks to our witnesses, and frankly, many people who've worked literally years to get to this point to have a hearing. The market has been way ahead of this, and frankly, it's been painful to watch, in 2017 and since, when you see the ICO market ripe with people committing fraud or just regulatory arbitrage, taking advantage of the fact that our regulators haven't paid attention to bad actors. And it's been especially frustrating to watch some of our regulators take aim at people that are working very hard and very aggressively to be legitimate businesses, to come into compliance with every kind of licensure and regulatory regime that our country currently offers. It's been woefully inadequate, and so it's so good to get to this point for the hearing. So thank you, and then thanks to my colleagues. I've been very encouraged by the amount of preparation many colleagues have done to close the gap in any knowledge they've had, and over the past few years, the number of members of Congress that really understand this space has certainly increased. 3 years ago, we had a hearing, not really a hearing, because as a junior member, I can't hold those or pick them. So in exasperation, we just held a meeting over at the Library of Congress, and some of the folks in this room were there, or representatives from your companies were there. And we came up with the most essential thing was to establish a bright line test, not just for the players in the industry, not just for the investors, but also for the regulators. So that if somebody at the SEC, for example, says this looks like a security, it's not a form of interpretive art to say, does it really fit this test? We came up with 4-part test that said it's already created, it exists, that it is recorded on a distributed, secure, and immutable ledger, that is not controlled by a central authority, that permissionless peer-to-peer transactions can be done without an intermediary, and it does not represent a financial interest in any entity. More important than that particular test is the fact that there is, as Mr. Brooks, you highlighted, a speed limit, so that there's some clear thing, not just, as I say, for the investors, not just for the participants in the market, but for the regulators themselves, so that we have continuity. If only there were such a body that could provide this clarity. My hope is that the next time we have a hearing, we will notice some bills, and we'll be able to talk about particular text towards that. So, Mr. Brooks, when you look at stablecoins, which maybe is the lowest hanging fruit, some of those are established well in long-standing things like New York trusts. Some of those aren't traded in anything. They're just U.S. dollars stored in a vault for every token. Some have U.S. dollars in components of M2, like U.S. Treasuries. Some have other things. When you were at the OCC, you provided some clarity there, and you also dealt, importantly, with self-custody. Mr. Allaire, you mentioned that the code is literally online. Any of us right now, during the hearing, could download code and could begin to self-custody a digital asset. So as you look at that, how important is it to provide this clarity, Mr. Brooks?
Well, specifically on the issue of custody and self-custody, this is a way that crypto tries to make an advance over the current system. So the issue with custodial assets we've seen, and this committee has looked at many, many times. Think about the financial crisis when there was an issue of foreclosures, and it was difficult for custodians to produce the original note that proved whoever was entitled to enforce that transaction and foreclose on a property because the piece of paper had gone missing or the custodian had merged with another custody company or whatever. One of the things crypto is trying to do is to use technology so that you can safekeep your own assets for free versus having to pay somebody else to custody it. That also provides a layer of financial privacy, something that this committee usually favors, but sometimes, strangely, doesn't favor. So self-custody is one of the key things, along with self-ownership and self-determination on this Internet of Value, that's really critical to the nature of the network.
Yeah, thank you. And as we've digitized information, it's frankly, amazing that we finally digitized money in a way that we can move not just a store of value, but a means of exchange. The use case for digital assets has partially been that it's this stable store of value. Certainly stable coins solve that. Some have pointed out that Bitcoin, for example, doesn't. And, Mr. Bankman-Fried, one of the ways that people have speculated that volatility is created in the market isn't by holders of the asset or hodlers, hold on for dear lifers, as has become known in the space, but by the other big group that owns these assets, which are traders. Many of them trade on leverage. And so when you look at leverage, you made a lot of news by saying, we're capping people at 20 times leverage. That's a lot of leverage. But you also pointed out that the average leverage on FTX was around 2x. So could you talk about the importance of leverage in volatility?
Thank you for the question, Congressman. The first thing that I'll say is in cryptocurrencies, in digital assets, as like essentially every other financial asset in the world. More volume trades through futures contracts than through the spot asset. The reason for this is basically it's more economically efficient. It's much more capital efficient. The lack of an immediate delivery requirement on the physical creates a much easier ability for people to hedge exposure, for people to express opinions. And so for all those reasons, I think that they're an important part of the digital asset ecosystem, as they are of every other ecosystem. I'll just briefly say it's important to have robust risk engines that monitor the positions on these assets. We've gone through multiple very large up and down moves and been able to manage positions both times.
Thank you, and thanks again for the hearing. I feel like I've spoken to Steve Case in like 1990, so thanks for the vision that you guys have, and thanks for the hearing, Madam Chairwoman.
You're welcome. The gentleman from New York, Mr. Torres, is now recognized for 5 minutes.
Thank you, Madam Chair. So I represent the South Bronx, which is often said to be the poorest congressional district in America, and of greatest concern to me are the use cases of crypto that would improve the lives of the people of the South Bronx. I represent a heavy population of immigrants who often pay predatory fees in order to send remittances to their loved ones abroad. So what can crypto, blockchain, Web3 do for that Dominican immigrant in the South Bronx who is burdened by remittance fees that she cannot afford? How much more affordably and quickly can the crypto economy facilitate remittances? Mr. Cascarilla, if you could take that question and please be specific.
Yes, thank you for the question. I think this is a really important element of the technology, which again is that it's open to anybody. You don't need to have a bank account. You don't need to, in fact, rely on any intermediary. So somebody who's an immigrant and wants to send a remittance to a family member in another country is able to do that. And there's ways to do it with both crypto and to do it with a stable coin. And all you need to do is download a wallet, and then you can send it to somebody else anywhere in the world. And so this is a really powerful tool for democratization of access, especially for those who have difficulty getting bank accounts. There's no minimum fees, there's no minimum balances, there's no check cashing fees that are part of this technology. And you can do it in some cases for a penny or less.
And how much quicker?
Well, this is an important point. Blockchains, part of the beauty of them is that they're operating 24 hours, 7 days a week, 365 days a year. So it can be sent just about instantaneously. There's no multi-day lags that you have right now. And that change in the speed is just crucial because usually it's these lags that really are very costly.
I'm going to interject. Mr. Brooks, I have a question about the challenge of enforcing laws in a world of decentralization, whether it be law enforcement relating to financial crimes or SEC disclosure. How exactly do you enforce the law when there is no central entity against which to enforce the law? How do we grapple with that challenge?
That is a great question, Mr. Torres. I really appreciate you asking it. So I'd say a couple things about it. First of all, to the extent that some of the activity we're talking about is parallel to activity that happens in the supervised system, my question is, why don't we allow it in the supervised system? Again, you've heard me say it before this morning, but you have on this panel a big stablecoin issuer who's applied for a bank charter. Doesn't look like they're going to get it. Easiest way to supervise that would be to let them in the banking system and have the OCC have authority over them. So I'd start with that. The second point is lots of these decentralization protocols are designed to solve the exact problems that create the need for enforcement in the first place, because most enforcement in the securities and banking system is about some combination of human error, human negligence, human greed, or human bias. And the point of some of these decentralized systems is to take that out and have an open source piece of software everybody can look at and do with those things algorithmically. So as an example, I used to sit on a bank credit committee. We would decide who got credit and who didn't. And I think we had a really good system for it, but we were human beings. We might have been indulging in implicit bias. We might have made mistakes. Algorithms don't do that. So some of the need for what you're talking about goes away in a decentralized system.
And I know there are critics who have said that the blockchain might not be as secure and as unhackable as advertised. But for me, the proper question is not whether the blockchain is perfectly secure and unhackable. The question is whether it's better than everything else. Like Winston Churchill famously said, democracy is the worst form of government with the exception of everything else. Is there a computer network that is more secure than the blockchain?
Well, I think the beauty of the blockchain is not that it's perfectly secure, it's that it's perfectly transparent. So you can see when somebody's screwed around.
But I want to specifically address security. Is there a computer network, to your knowledge, that is more secure than the blockchain?
I don't know of one, but we have a PhD in physics sitting right next to me, so we'll let him, answer.
If you're talking about any major globally used blockchain, I don't know of one. There are small blockchains that are less secure. All the major ones are incredibly secure.
And one of my concerns about crypto is that it would present a challenge to the supremacy of the US dollar as the world's reserve currency. But what I have found striking is that the leading stablecoin issuers have actually chosen to peg their stablecoins to the dollar, which strikes me as a vote of confidence that reinforces rather than challenges the status of the dollar as the world's reserve currency. So what are your thoughts on the relationship between the dollar and the crypto? Is it as contradictory as many have feared, or could it be actually complementary?
I'll answer that. I actually don't think that it's contradictory at all. What people want is a U.S. dollar bank account. Everywhere in the world, people want to be able to have U.S. dollars. And actually, that's the hardest thing to get. And crypto is a tool for a lot of different things, including bringing communities together. But what people want in order for their everyday spending, it's dollars. If you're in Argentina, you want dollars. If you're somebody anywhere in the world, you want to have access to dollars. And that's the hardest thing to get access to right now. And that's why tokenized dollars is so valuable, because you don't need to have a bank account, yet you can have access to the dollar-based system. And a very, very important tool for inclusion.
The gentleman's time has expired. The gentleman from Michigan, Mr. Huizinga, is now recognized for 5 minutes.
Thank you, Madam Chair, and my apologies to the panel. I had to leave to manage a bill on the House floor dealing with a very exciting issue of LIBOR. I will not.
Thank you.
You're welcome. We're getting there, Madam Chair. But to my colleague from New York, I do want to point out that this isn't quite the same, but the same idea exists. Committee of Republicans released a CBDC, a central bank digital currency principles recently, and of those, we had said in this as one of those principles is we need to make sure that the private sector leads the way, but we need to ensure that the U.S. dollar remains the preeminent currency. And so that is a common goal, certainly, and we've been very aggressive in trying to lay that out. I've got a short amount of time. I'm going to try and go through as quickly as possible, and I'm going to peek around my colleague from West Virginia here, trying to get to Mr. Bankman-Fried real quickly. And again, I apologize. I'm not trying to replow ground that has already been gone over. But how many various levels and types of regulators do you currently engage with? Because I know you are worldwide. You've indicated that you have multiple regulators that you currently work with. I'm curious if you can even peg that number.
Yeah. So I mean, there are dozens, probably soon hundreds worldwide that we're engaging with, and you know that includes all across Europe, all across Asia. And then, you know, within the United States, we're engaging with state money transmitter money service business licensure. We have a CFTC license for derivatives. We're engaging with the SEC. And, you know, I anticipate more agencies getting involved soon as well.
Well, yes, and I want to make sure that we are not over-regulating that. One, I'm sure it has cost you an untold amount of money so far, and I'm sure everyone that has been dealing with that. But I also want to make sure, and no offense to any of you, I want to make sure that there are others who are going to be able to enter that space, and that they are not being blocked out, and that there is an artificial barrier to entry that is going to allow others to do, frankly, what you all did, which was be innovative and supply a product to people who are looking for that product. I'm going to have to move really quickly. I'm going to go to Mr. Brooks on a couple of things. Would you describe why establishing these clear rules of the road is important? Before we, an important step before we add additional regulation and consider that regulation?
Well, Mr. Huizinga, it's good to see you again. I think the most important reason of many is international competitiveness. So other countries make this easier. Okay, let me just make clear, other companies make this easier, other countries. I just came yesterday from the Middle East, where in Dubai and Abu Dhabi, they have super clear derivatives regulations, super clear ETF regulation. They're trying to lure Americans over there to build these products, and they're moving there.
So how are they viewing these crypto assets differently than traditional assets? I mean, what Rubicon have they crossed that we haven't? And why is it important to think about digital assets differently?
Well, I think one of the things that they've figured out is that crypto actually is less fundamentally different than equities and debt than you think it is. It's a risk-on asset that people want to invest in. They want to invest in it in Canada, so Canada builds a regime for it. They want to do it in Germany. We're the last country standing that hasn't figured that out. It's a risk-on asset that people want exposure to as part of asset diversification.
As opposed to traditional assets.
Correct.
Okay. I've got a minute left here. So, Ms. Haas, if you indicated in your testimony that, quote, every asset listed on Coinbase platform is subject to rigorous legal, compliance, and security review, close quote. Could you provide us specific details on what Coinbase's process has been to be able to make that type of statement?
Thank you for the question. Yes, so specifically for the legal review, we assess each asset under the Howey test, where we, as Brian Brooks spoke about earlier, through the Crypto Ratings Council have established a framework where we look at the risk factors and we determine whether or not it meets characteristics of the Howey test. It's a risk-based assessment. It is not a black and white test. But based on our assessment, we believe it's lower risk that these are securities and before we list them on our platform. We separately do a compliance review. Our compliance review includes looking at the developers of the token, ensuring they're not on an OFAC sanctions list. We look at to make sure it's not a scam, that there's actual people using this coin, that it was developed in sound manners. And then we look at a security review to understand the underlying code to say, can we provide custody for this? Is this at heightened risk of an attack or someone pulling the value from these assets? So it's security, legal, and compliance before we list an asset.
Okay, and I'm hoping that the chair will grant me leave for my LIBOR work to just end with a closing statement as my time is up here. A number of you have brought up the unbanked and underbanked. And despite rhetoric that gets thrown around, all of us on this committee are very concerned about it. I happen to represent the second poorest county in the state of Michigan, which is in the top 100 poorest counties in the nation. And I understand what it means for these unbanked and underbanked folks to be involved in the process. What I want to make sure is what we do, not just here today, but in the future. We tend to be lag indicators at the government level and with regulators rather than on that front end. And I'm hoping that we do nothing to harm their opportunity to engage in the process. With that, I yield back.
Thank you very much, and thank you for LIBOR. The gentleman from Florida, Mr. Lawson, is now recognized for 5 minutes.
Thank you, Madam Chair, and Ranking Member Henry. This is a very extraordinary meeting, and I would like to, again, as everyone else, welcome all our people who are testifying today to this committee, which is very important. I'm not sure, probably would take me a long time to understand what all we mean by cryptocurrency. And I just heard some testimony stating that how we lag behind all other countries in making changes. And this is to everyone. My colleagues, Representative Soto and myself, and 8 other members of Congress led a letter to leadership addressing the digital assets provisions that expand the definition of broker under Section 6045, C1 of the Internal Revenue Code in 1986 to include any person who, for consideration, is responsible for the regular provision and service of effectively transfer of digital assets on behalf of another person. As drafted, the provision would include miners and other validated, as well as software and hardware wallet makers who do not engage in trading activities and are beyond the scope of broker services. What are your thoughts on this provision? Do you think this is a good tax policy to require non-brokers to report on transactions for people who are not even their customer? Why or why not? And this is to the whole committee.
Well, maybe I can jump in there, Congressman. It's Brian Brooks speaking here just for a moment. I've said many times that language would be sort of like requiring YouTube to get an FCC broadcast license because they're a person engaged in distributing television content. I think what we need to recognize is there's a difference between centralized exchanges. You have two of the biggest ones represented here who all agree that they should be engaged in tax reporting, and they do that, versus decentralized algorithms where there is no company involved in the transactions at all, and there's no one well situated to provide that kind of tax reporting. So that distinction is, I think, super clear. The technology has enabled people to transact peer-to-peer with no intermediary. So who is it that we're asking to do the tax reporting in that context?
Anyone else would like to speak on that?
Yeah, just one. This is Janelle Dixon from the Stellar Development Foundation. One of the issues that I think that is a problem with this is that it may seek to require these entities that actually don't have access to any personal information at all. Because as the validators, they're actually just validating the transaction and don't know who those individuals are that are on the other side of it. It might require them to gain access to that information, which is exactly what I think many of you and us do not want.
Anyone else before I go to the next question? Well, this question is for Ms. I hope I pronounce this right, Ms. Haas. Does Coinbase have multiple lines of business? Have multiple lines of business? How are each line of business segregated and ring fenced from one another to a confidential information is not improperly used, where confidential information not improperly used?
Thank you for the question. Coinbase does have multiple products. In many cases, we consider our products a product family where we're serving one customer, and the customer benefits by having those products within one application. So for example, we provide custodial services, which is, for all intents and purposes, a wallet where they can hold their crypto assets. But then integrated with that is the ability to trade out of that account and then to settle new assets back into that account. So those are different products to be able to store versus be able to buy or sell, but they're integrated products. Those we have within one legal entity as an example. They are offered as one product family. That is different from when we offer products such as our Coinbase Cloud offering, where we're using our technology to allow others to build in the crypto economy. That data is 100% ring-fenced, not allowed through any of our other products, and we do segregate data. We have different engineers, we have different legal entities, we provide a lot of protection. So it depends on the product that you're speaking about, Congressman, and some we share and some are very much ring-fenced.
Okay, real quick, another question. Do withdrawal fees apply to taking crypto off the platform? What fees apply?
몸이 너무 안 좋아서
How are
일단 좀
these fees
쉬고
calculated?
본업에 일단 돌아가야 될 것 같아요,
We do
여러분.
not charge any fees to withdraw.
또 말을 하려니까 이게 말이 잘 안 나오네. 오늘 진짜 몸이 너무 안 좋아서 일단 좀 쉬긴 쉬어야 될 것 같고, 혹시 여러분들이 이 부분이 이거 어떤 웹사이트인지 모르실까봐 이게 제가 커뮤니티에다가 이 웹사이트 유튜브 주소를 올려 놓아 드릴게요. 여러분들이 보고 싶으면 보실 수 있도록. 자막이 그래도 영어 자막이 뜨니까 제가 알기로 이거 아마 번역이 안 되네. 이건 번역이 안 되는구나. 그냥 커뮤니티에 일단 요거 주소를 올려드릴게요. 여러분들 보고 싶으시면 언제든지 볼 수 있도록 해드릴 테니까. 네. 네, 강유아님, 도네이션 감사합니다. 오늘 도네이션 주신 분들 다들 감사하고요. 오늘 죄송해요. 제가 진짜 너무 몸이 안 좋아서 더 이상 조금 좀 쉬긴 쉬어야 될 것 같아요. 지금 잠을 못 자가지고 제대로. 네, 머리도 좀 띵띵하고 그래가지고 좀 오늘은 좀 쉬고 좀 있다가 좀 몸 좀 괜찮아지면은 본업 좀 하다가 돌아오도록 하겠습니다, 여러분들. 네, 일단 다들 오늘 너무 수고하셨고요. 제가 여러분들 구독과 좋아요, 알림 설정 꼭 눌러주시면 제가 이거 최대한 정리해서 기억나는 대로 이제 본업 좀 끝날 때쯤에 정리해서 여러분들한테 올려드리도록 할 거니까요. 꼭 좋아요, 구독과 알림 설정 눌러주시고 여러분들 여기서 저는 마치도록 하겠습니다, 여러분들. 다들 너무 틀림비님, 다들 오늘 좀 부탁드리는데 제 채팅창은 항상 제가 주장하고자 하는 분들이 있습니다. 여러분들 다들 처음 오신 분들도 많으실 텐데 저는 제 유튜브 채널을 많은 분들이 토론할 수는 있지만 서로 대한 존중은 지켜줄 수 있는 채팅창이 됐으면 좋겠어요. 코인 쓰레기, 뭐 주식 쓰레기 이렇게 얘기하지 말고 코인의 이런 부분들에 대한 장점이 있지만 저는 코인에 대한 코인에 대한 이런 부분 장점이 있어서 미래가 있다고 생각합니다. 저는 뭐 찰리먼거 아저씨가 얘기한 것처럼 코인이 뭐가 이래서 코인이 앞으로 안 좋다고 생각을 해요. 뭐 이 정도 이야기는 충분히 해야죠. 해야 되고 이야기를 해야 되고 집단 지성을 위해서 하는 게 맞지만 서로를 깎아내리진 말아요, 여러분들. 서로를 깎아내리지 말아요. 알았죠? 여러분들 지금 너무 힘들어서 제가 좀 원래 이거보다 좀 텐션이 높은데 오늘 진짜 너무 몸이 좀 안 좋아서 여러분들 제 원래 다른 영상 보시면 알겠지만 제가 원래 이거보다 텐션이 한 100배는 높습니다. 근데 지금 좀 몸이 좀 안 좋아가지고 네. 무튼 말씀드렸지만 항상 서로에 대한 존중을 잊지 말고 그 안에서 여러분들의 의견을 피력하는 건 충분히 가능하니까 그런 식으로 저의 채팅창이 앞으로도 유지가 됐으면 좋겠어요. 여러분들 오늘 너무 수고하셨고요. 여러분들 여기까지 유명해지고 싶은 남자, 유능해지고 싶은 남자, 유재석이 되고 싶은 남자, 유튜버 유사남이었고요. 여러분들 꼭 좋아요, 구독과 알림 설정 눌러주시고 다들 아시겠지만 매주 주말 정기 라이브 방송이 있고 여러 가지 이야기를 진행을 하고 이번 주 주말 방송할 내용은 이제 이번에 NFT 게임들, Play to Earn 게임이 많이들 나왔잖아요. 그런 부분들에 대해서 이야기를 할까 생각 중이니까 꼭 구독과 좋아요 눌러주시고 이번 주 주말 미동부 기준 9시, 한국 기준 11시, 오후 11시에 진행하고 있으니까 꼭 여러분들 참석해 주셔서 자리를 빛내주시기 바랍니다. 여러분들 오늘 너무 수고하셨고요. 오늘 너무 힘들다. 다들 오늘 여러분들 다들 수고하고 여기서 마무리 짓도록 할게요. 여러분들 오늘 너무 수고하셨고요. 더 중요한 내용들이 추가로 나오게 되면 일단 틀어놓고 일을 할 거니까 여러분들한테 커뮤니티에 꼭 적어서 올려드리도록 할게요. 제가 여러분들에게 중요하다고 생각되는 내용들이 나오면. 오케이? 다들 너무 수고하셨고요. 여러분들 여기까지 유저지에 산 남자, 여기까지